Hey guys, I came across a stock this week that I think you ought to know about. This is a stock that has an incredible business behind it. And it was really impressive to me. I have heard no one on YouTube talking about this particular stock. So I thought I would go ahead and share that with you in case it was something that would be of interest for your portfolio. So if you want to hear more about this, stay tuned. Hey guys, Kevin Burgess back again with another video. I'm really glad to see you guys here. You know, a week or so ago, I was kicking it around with my friends, ex-Dividend Dad and Suzuki Man 89. We actually got on a Zoom call. We were just tossing around some different stocks and pulled up some stock screeners and just looking at things we'd never looked at before. And up pops a stock that, you know, at first when I saw the name, I thought it was a different product line. But at the end of the day, I looked at it and I was like, this looks pretty cool. So did some more research and actually ended up starting a position in this particular stock. So I wanted to share that with you today. And also as a free bonus, just for you guys watching this video today, in the description to this video, I'm putting a link in there for my analysis on this particular stock. I think you'll want to take a look at that because it is my process that I pull together, that I look at individual stocks with, and I've put them together in a, let's say, a 4-page PowerPoint slide. So I think it'll be really good for you guys to see the details that I go through. I'll kind of roll through it at the end, but I do want you to download that for free. And for those of you who have seen my video on my investing philosophy, this PowerPoint slide will match very well with that. If you've not seen that, I will put it at the end of the video. You can click on it and watch it at that point. If you don't know who I am, my name is Kevin Burgess. I invest in dividend stocks. I love talking about dividend stocks. If that's something that you're interested in getting into, whether you own dividend stocks or just really trying to research whether that's something for you, consider subscribing to the channel. I'd love to have you along for the journey. I have a background in senior management, working with boards of directors, working with the SEC filings, working with financial statements, internal auditing, risk, that entire environment. So now I'm retired and I take all of that experience and I put that into selecting dividend stocks. And I share that with you, not because I'm suggesting that you buy what I buy or sell what I sell. I'm just sharing it with you so that you can see how somebody else does it. So with that out of the way, let's get to the stock. So the stock we're going to talk about today is called Graco, ticker symbol GGG. You know, at first I thought it was the company that makes the children's toys, the Graco, you know, the big Graco toys, the plastic toys, but that's not who these folks are at all. Let's look at who they are. It says about here. Graco designs, manufactures, and markets systems and equipment used to move, measure, control, dispense, and spray fluid and powder materials worldwide. Now, I don't think they spray fluid and powder materials worldwide. I think what they really meant was they're a worldwide company who sells the equipment to do all of that kind of stuff. So let's look at some of the numbers associated with ticker symbol GGG, which would be Graco. As ex-Dividend Dad would say, it's a G thing. So dividend yield. Now, some of you are going to be turned off a little bit by the dividend yield. It's only 1.2%. But just stay with me on this because this is a really good business. And I really want you to know about it. Even if you don't follow through with it, I want you to know about this company. So the dividend safety score is 99. That is the largest safety score that Simply Safe Dividends gives. They have a 12% dividend growth this past December. To talk about their dividend growth, as we said, the latest was 12%. In the last 5 years, they've averaged 12% dividend growth. And in the last 20 years, they've averaged 14% dividend growth. You can look at this chart and see the growth and the consistency around that. They have a dividend growth streak of 30 years, which is plenty for my book. Let's take a look at some of their financials. Their earnings payout ratio is in the low 30% range. Their free cash flow payout ratio typically is in the 30 to 40, 50% range. In 2022, you'll notice that it spiked, but that was related to really two things, which had to do with working capital associated with some of the supply chain disruptions, and then also capital investments that they made to actually grow the business. And those are the kinds of things we want them spending their cash on. So you'll see that their free cash flow payout ratio in 2022 was pretty high, but it's because they were investing in their business. Look at this earnings per share chart. I mean, it is basically up and to the right. Their free cash flow per share, again, took a dip in 22, but otherwise is trending higher. Now, their shares outstanding are not coming down very fast, and that's actually a good thing because I believe they are growing their business and they are making money with those investments. And, I'm okay with them growing the business as opposed to buying their shares back. So I'm actually good with that. Look at this sales chart. I mean, it is basically up and to the right. Return on invested capital is in the mid 20% range. That is really phenomenal. Here's some other cool stuff. They have zero net debt to capital. So they do have some debt, but they have more cash on hand than they have debt. And you can actually see this, that their interest coverage ratio is just over 100. So they basically have 100 times the operating profit as what their interest expense is. So in general, they have some tremendous financial numbers and they have some really good capital allocation numbers. So now let's take a look at their valuation. Now, according to Morningstar, they are valued at, they have a fair value of $75. Their last close was at $78.20. So they're roughly at fair value, maybe just a hair above fair value, according to Morningstar. And then let's take a look at what Alpha Spread says about them. They value them at 57.24. That 57.24 is obviously a lot lower. It's about 26% lower than their current valuation. So Alpha Spread would actually say that they are overvalued at this point by 26%. But let's come back and look at their dividend yield compared to the average dividend yields for the last 5 years. You can see that's pretty much right on what their 5-year average has been for the dividend yield. And also their forward PE ratio, 25.1, is in line with what their previous 5-year average has been. So if you're looking for a stock that is way undervalued, that the market has forgotten, this is not the stock for you. This is a stock that we're going to have to pay, I believe, going to have to pay fair value for, maybe a little bit more to get this particular company. But this company basically manufactures and sells components for manufacturing process, especially in powder coating and even in foods, like moving peanut butter from machine to machine. This is the company that produces the piping, the valves, the motors that actually gets that from one place to the other. They have, I believe, a very similar business model to Parker Hannifin. Parker Hannifin does this in the aerospace area. Graco does this in the manufacturing area. They have a tremendous amount of high quality parts that they sell. So their competition is going to find it difficult to compete with them because they have just so many parts. And it's a one-stop shop for these companies. And it's not high price stuff, so they're not necessarily out trying to find the best deal. They're looking for somebody who can supply these materials, who can do it effectively, efficiently, get it there on time, and have a good quality product when it gets there and get it installed. Hey, here's a kicker, guys. Look at this trailing return. So basically, this is the market returns. These are the total returns. This would include dividends for GGG as well as the index. They don't have an industry for them for whatever reason, but they have an index for them, which is the Morningstar U.S. market total return U.S. dollars. So they've got GGG, which is Graco Incorporated's total return, and they have the index total return. And this is what I want you to see here. Look at this 1 month is, GGG is just taking a hit, and it's because their growth is not what they had originally thought it would be this year. Look at the 3 month. It's not as good as the index is. But then all of a sudden, let's take a look at year to date. Year to date, they are still in line with the market, even with a 9% drop this month. In the 1 year, they are beating the index, almost triple the index value. The 3 year, they're beating the index in the 3 year, the 5 year, the 10 year, even the 15-year average return. They are beating the market by a hefty amount, about around 30%. So guys, I see this as a tremendous business that is going to grow itself over time. They're growing their dividend pretty fast, so I realize that it's low, but it'll begin to grow and it'll compound on itself as it gets bigger, and also you get a bit of that capital growth as you go. So let me show you what I put together for you that you can actually download from the comment section of this. Maybe not the comments section, but the notes section of this video. And I want you to do that. I want you to take a look at this. Give me some feedback. Tell me if you like this kind of analysis or not. It is free of charge. You don't have to pay anything for it. Just go into the description of this video, click on the link that is a Google Slides link. So you just basically go in there, sign in. This will actually pull up for you, and you can see everything that I look at, even my analysis, my notes, my conclusions about this particular stock. So let's take a look at that really quick. I'm not going to go through it. I just want to show it to you. So basically you have a cover page. I have a page that looks at the overall scores and then it looks at the business strategy with some stats here on the right-hand side. I've got a lot of graphs around the financial health, and then even some description around here of my takeaways from these slides. On the capital allocation, I show what I look at there and my takeaways. I do an assessment on the management team. It's really qualitative, not quantitative, but those are my thoughts on the management team. And then lastly, the valuation. Oh, and this is kind of cool too, guys. I have put in here highlights from the most recent earnings presentation. So I'm really excited about this format. I really would like for you to take a look at that. Give me some feedback on it. Do you like it, not like it? What would you like to see differently? What didn't make sense? I want to make this better because it's really my way of pulling together the key things that I look at when I'm evaluating a stock. So guys, that wraps up this video. Take a look at GGG. It is really, in my opinion, a great business. Whether or not it fits into your portfolio is obviously your decision. I am not a financial advisor. I am just taking you along on my journey with me as we go down this road. So I really am glad you're here. I appreciate you watching these videos. I enjoy sharing this stuff with you, and I look forward to hearing more from you, and I look forward to seeing you on the next video.